Welcome to the Crypto Report, the channel that discusses all things crypto and investing. Please do us a favor by liking and subscribing to the channel. In today's video, we'll teach you some common investing terms you should know before you start investing. Term 1, a bear market. A bear market is one marked by negative sentiment, pessimism, and declines, typically of at least 15 to 20% and lasting more than 2 months. Term 2, asset allocation. An asset is any form of investment that has the potential of making a return, such as a stock, bond, ETF, mutual fund, real estate, and more. An asset allocation is the practice of balancing your investments to limit risk. This is done by diversifying your portfolio with different types of assets that maximize the reward and minimize the risk. Term 3, dividend. Some companies pay out a portion of their income to shareholders, which is called a dividend. A dividend is a one-time payment that may be sent periodically, for example, every month, quarter, half a year, or year, or may not be paid out at all. Term 4, exchange-traded funds, ETFs. As an investor, you can buy and sell shares of ETFs, just as you can do with stocks. But buying a share of an ETF gives you some ownership to a fund of different assets, while buying a share of stocks gives you some ownership to individual companies. Term 5, index fund. An index fund is a mutual fund that is made up of assets in a way that mirrors a certain index. For example, if you are invested in a NASDAQ 100 index fund and the NASDAQ 100 goes up, so too will the value of your index fund. Term 6, mutual fund. A mutual fund is a pooled portfolio managed by a professional portfolio manager. This manager uses the pooled fund to buy a diversified portfolio of securities. The pooled funds come from individual investors who purchase shares of the mutual fund. Term 7, shares. Also known as stocks or shares of stock, are a portion of ownership of a company's equity. The value of a share is based on how the company divided its equity into units. Shares entitle the share owner to a portion of the company's profits or gain in stock price. This also applies to a drop in the stock price, as the value of the share will go down with it. Term 8, a bull market. A bull market is a positive stock market environment in which stock prices are increasing generally, and investors who have high confidence are buying stocks. Term 9, market capitalization. A company's market cap is the cumulative value of all of its outstanding shares. The market cap can be calculated by multiplying the company's current share price by the number of shares outstanding. Term 10, individual retirement account, IRA. An IRA is a type of retirement account that comes in various formats and offers a tax advantage for retirement savings. Term 11, 401k. 401k is a retirement savings and investment plan that employers offer. A 401k plan gives employees a tax break on money they contribute. Contributions are automatically withdrawn from employee paychecks and invested in funds of the employee's choosing. Thanks for watching. Please subscribe for more informative videos.